What? Action.
Hey, got me caught looking at the charts down there. Well, anyway, my name is Scott Redler. I'm the Chief Strategic Officer at T3Live.com. You're in for the recap. It is Wednesday. It's definitely been an interesting week. Started the week on a big gap down Monday. Everyone was worried the world would end on the healthcare bill failing. P.S. Within the first half an hour, the 50-day moving average was reclaimed in the S&P cash. Then all of a sudden on Tuesday, we opened up a little lower, held that 50-day again, and then extended. Today, little soft open. Tech, again, strong. Some stocks breaking out, and then some rotation with some help from energy and whatnot. And all of a sudden, we're sitting at another inflection point. And what a coinky-dink, just as we get into the quarter's end. Tuesday, my title was window dressing, and then today was can we get some accessories for those windows? And I think we got a few accessories. So anyway, here's a chart of the S&P cash. If you take a look here, pretty interesting. Here is that accelerated trend that broke. If you happen to have gotten out or got short right here at that inflection point, you know what? You had the luxury of buying in at the hole at the 50-day right there, or when it reclaimed the two pivots from last week, or you could have even waited for it to take out Monday's high. And now look where we are. If you want to draw another little, like marking it up, now all of a sudden you have this new descending trend line here. So the question is, can we resume the uptrend? Is this more than window dressing? Is it gonna, is it gonna build and go again? Well, at least now we have new points of reference. In today's note, I said we had a hold above 23.44. Didn't even get there. Got to 23.52. Little inside day, brushing up against here. I'd love to see another inside day or so, and then we'll figure out maybe new quarterly money is going to come in and give us a push. But as of now, at least you've had different types of setups here, reducing risk here, covering shorts, maybe putting some back on, and then there you go. Lots of sectors have been on the move. Monday was your buy in the whole of the banks and the small caps. Today they were quiet. Doesn't mean it's over. They're not going to have blockbuster moves every day. I am still in some of this Bank of America. You take a look here. Not the end of the world that it didn't rally today. We bought it in the hold here, or when it did the red dog reversal, it broke above this spot and it's still above it. A few more days like this, maybe it comes up and tries to pinch the moving averages. Here is if you exited it when it broke the accelerated trend. You got to massage, or you have to use the ranges. Broke here, buy here. Now, I'm a little lighter than I was in the hole, but I'm still in some. Maybe it builds a little bit inside of a bull flag here to go again. JP Morgan's best in breed. I might as well just show you that before I move on. JP Morgan also, came. Where did it hold? It held above actually the long-term support. Gave you that little red dog reversal right there, and just an inside day. Inside days do happen. At some point, we'll see whether or not this resumes the trend or it was just a bounce. We shall see. Yesterday, I had my co-host in who's going to be coming on with my Chinese recap, and she's like, we need to focus on oil. I'm like, oil doesn't really, do anything for me, but I guess you could say it can get an oversold bounce to the 21-day. And that's what the XLE did, the energy sector. Look at that, boom. Now it's kind of interesting, you still have this descending trend line here. You still have the 21-day, which has been resistance for quite some time. I would say now if this could go sideways a little bit, have an inside day or so tomorrow, maybe starts to help the market versus just be a headwind like it's been since the start of the year. We shall see. My morning call or on the VTF yesterday, we talked about playing a bounce in EMES. Why playing a bounce in EMES? Well, here was your reversal candle that if you got out, and then into major support. Okay, but by the way, this was on my Redler report. Wow, what a move. I think my target was 20, went to 24. But anyway, these are little trades you could do. Go sideways, poke this head up above the 8-day to the 21-day. This is a decent percentage gain. I'm not sure how much more you get, but something. CHK, a broken name. Broken names could also be trades. Look at that. Boom, went sideways. I put it on my morning note this morning saying it went sideways. If it gets above here, you can make a cash flow trade. Wow, especially if you sold it on this outside day. So there are different ways to trade stocks and sectors that are not near 52-week highs, ready to break out, but tactically with a plan. Tech's a different story. Tech hasn't been the easiest considering, a lot of these names went to the 50-day and then from the 50-day made new all-time highs, so it's not the easiest thing to grab. Amazon, for instance, I did not play it. I apologize. I listed it in my note. A lot of guys on Redler All Access said, hey, thank you for listening to the 50-day on Monday. I bought it. Or thanks for telling me about the Red Dog reversal at 839. I bought it. Or thanks for having this pivot here. I didn't care that it had this 2-day move before going there, and got beat up here. But anyway, nice breakout move, Amazon. You know what? If it would have broken out here, we all would have made a heck of a lot more money. But you know what? Did a false breakdown. People might have got out. People might have got short. And that's could have been what helped fuel this move. If you remember, Amazon's the best when it leads a breakout, not the last one to go. So now you have Amazon breaking out, and the S&P, again, is only, is 40 handles off the high. So that shows you a lot more power there. Netflix did the same thing. Those of you who bought the 50-day in Netflix, similar pattern, came to the bottom end of the range, gave you a nice red dog reversal right here, reclaimed this 3-day range. If you were short, you had to get out. If you were saying, I'm buying it down here, congratulations. If you did so, now it's poking its head right here. Maybe it goes above it, maybe it doesn't, but all in all, right back to the upper end of the range. So if you exited on this, look at this, outside day, opposite outside days. Here's your exit, comes in. At least this could have been your entry with a plan, right back up. That's how you can maneuver things with points of reference. Facebook looks the same also, right back to, or through highs. Again, 3 days up. What did it do though? It held the 21-day right there. So if you were long from this little reversal candle here, you never had to worry. It never violated that. And there you go. A few things that we did act and behave better with. I was long Apple since that Monday low. Sold it today. Still looks good, but for me, I took the 3-day trade. Nice buy into the 21-day. Nice add right here. And would be good to see some inside action. That one, you can't be in everything. That one I chose to stay with. Not in it overnight. Baba was something I chose to stay with. Baba, actually, I am still in overnight. Why? Because it hasn't really broken out yet and ran. It's not up 3 days in a row like some of the other ones. So I was in it here, stayed in it, added to it, and we'll see if Baba can now break out above this prior area. You look here, it's coming right into it. Chinese fintech, Chinese digital world. Here's when we put it back on the radar. Some of you guys along from this gap up after earnings and never got violated. Now we'll see if there's a little power here. It'd be nice if some power comes back. You go all the way back here, and you'll see, there you go, right back into this area, and this is the all-time high. And the Shanghai's acting better. So we'll see what happens. That one I'm still in. I did buy Microsoft today. it's not a barn burner, but I figured if they want to paint the tape a little bit more, this has been a strong stock. It's been hovering near that 65.50 for so long. So just for a trade, I figured, hey, why not? It's been in this little tight range for so long. Last time I tried to buy it was right here, and I got hurt. And now I figured in this little spot, maybe if it gets above this, not saying it's a barn burner, but it's been in here for a long time. Money's being put to work. It's above the moving averages. It can go, so it's something to do. That's what you need, some things to do. I haven't been trading Snap for a while. Then all of a sudden, it got on my radar a few days ago when it tried to break above 23.5 and failed on that Facebook news. So this morning, I'm like, hey, maybe it holds 21.50. So my morning note is like, I'm going to probably be a buyer at 21.50, and then maybe when it goes green. So Snap wound up turning into being a great trade today. What did it do? Held the middle of this bar here, which was like that 21.50. I actually had orders in my swing account. That's the beauty of being on the virtual trade floor. Like, what are you doing with Snap? I'm like, putting some bids in 21.56, 21.36, got filled, and then added here the first time it got here, and it didn't work, but the second time it did. So now, could have a little bit of an inverse, I don't know, it's a little early, inverse head and shoulders here, where, anyway, it's just a trade. We'll see. Close strong. There were some bids in there. Maybe it opens up. I'm in small. It was a good targeted trade. Just saying, hey, it was up 24. It was at 24 and change down here, 21 and change. Play the range. There's still some support behind it. So that's why I did that. For those of you asking about FireEye, I'm still in it from the day that Goldman went from a downgrade to an upgrade. It does seem as if it could continue a little bit more. Again, not a barn-burning trade and not a leading stock trade, but if you remember FireEye, that was friggin' $50 all the way back then. Lots of cybersecurity problems out there. At this point, it did gap up, okay, held it, and now it just cleared this spot. So to me, that's a take home for at least a gap fill here, and maybe even a test of the 200-day, maybe even a takeover. But at this point, I'm trading as a technical new play. Why is it a new play? Because it gapped up, didn't fill it. It's above the 21-day. Now we'll see if it goes higher. What else is going on out there? What else was? Some of you guys played the bios. I did not. If you look at the bios, still hanging around. Here was your little outside day Monday. Came in Tuesday, held up Wednesday. yeah, just things going on there. This was really your wake-up call there, but it's still hanging in. What I showed you the XLE oil. What did it do for itself? Another day, took back the 8th day. So we'll see now oil. Maybe it works its way back up. This is when a lot of you guys got out of it. Gap down, slice through support, slice through the 200-day. Maybe there's a little bit of room, which could help the broader indices, but we'll see. I showed you the XLE already. What else? Some guy was asking me about Oracle. You know what? It had big earnings. Okay, if you didn't chase it on earnings and said, I'm going to wait for a pull-in, well, it's been coming in, coming in, coming in. Maybe it holds here. Okay, so we'll see if this gap stays up. If it does, the real trade is when it turns up above this to go back towards those highs. It is a slow stock, but these mega caps with buybacks and dividends have been working, so see what happens there. NVIDIA, not really doing much. I'm in small. Maybe it's lulling everyone to sleep, maybe it's not, but usually I like to see this go ahead of the market. It's been hanging in here. I'm in small. The real trade is if some kind of crazy volume comes in above 109, 110. I guess we'll have to have some kind of news. Some of you who are in it from this red dog reversal right here are just sitting tight. So keep sitting tight and then maybe add if it goes above that, and this is your stop. And that's about it. Very methodical week. Again, if you sold when the accelerated trends broke, this Monday you came in with, you're ready to embrace volatility. You could have bought in the hole. You could even waited for some pivots to be reclaimed. On Monday's recap, I think I went out with 5, 6 longs. I gave everyone reasons for each one of them. And then Tuesday turned into a good day. And then even today, it was a little bit more selective, a little harder to be long, but things opened down a little bit and built throughout the course of the day. 3 nice days. Everyone's like, oh, well, it was window dressing. Okay, well, you could have known it was window dressing and combined the technicals and made money and not been frustrated about it. Got to know the market mechanics, besides market technicals, besides a little common sense, besides an even keel, besides your balance, besides your process, besides this, besides that. Anyway, have a good night. I'll see you in the morning call tomorrow. Bye-bye.